Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis on Wednesday, December 17, 2014. Daily chart of the SPY. Big up green candle today should come as no surprise to anybody. I've been telling you not to be bearish the market. I said my maximum downside that I thought was going to happen was about 196 and what did I say? The low here was 196.73, this gap window. I said if we go through that, your gap fill over here, and then you had the 200 period moving average right underneath that. And that's what I said last night, Tuesday. And I've been saying it for quite a while, about a week now. I've been telling you what the target was, and we didn't quite get to the target, but nevertheless, we got close. We got within $1 or something like that. So basically, we had a big up green candle today, and that's a big up day on volume. But the only thing that has me a little bit concerned is we didn't take out the volume from yesterday. Today's volume was 253, almost 254 million shares in the spider. Yesterday's volume was 259 and a half. That has me a little bit concerned, but not too much. It was a nice big update today. The market was due to inflate. It was too bearish. I said get on the other side of the boat, and here we are on the other side of the boat, and everybody got stuck with the herd. And we went to the other side and waited for the market to turn, and here it is. Market was up today nicely, and then the Fed came out with their nonsense, and then the market rallied up into the end of the day. That's it in a nutshell. And let's take a look at some other stuff. So the IWM. I'll talk about something important in a second. This is all important, but something else. So the IWM was a little bit of a different story on bigger volume than yesterday and the day before, and this was a huge update. The IWM was up 3% today, and I always tell you the IWM leads the market. This is the Russell 2000 Small Cap Index. This leads the market up, and it leads the market down. And where can we go from here? Oh, I'm going to go back to the SPY and tell you where we're going. I forgot. I apologize. So where can we go from here? Well, first target would be this top right here, this double top in here where we had a lot of chart, congestion up in here, chopped around for a long time. And that's about 118, 118.50. And I think we will get through that, but I don't think we'll get through a double top at 120 or so. So that's your upside target there. There's not that much upside left, but we're going to chop around for a while. You're going to have a couple of down days here. You're going to have a couple of down days there. Then we should rally up, but the market's going to get quiet into the end of the year around the holidays. So your up days are not going to be like today where the S&P was up 40 points. Your up days are going to be more muted. 3, 5, 7 points in the S&P, that kind of thing. You're going to go back to those quiet, float up days, chop around a little bit. Let's go back to the SPY, and I want to tell you my thoughts in terms of where we're going. So your first target is, and last night I even told you that your first target was going to be about a third of the decline, assuming we got down to here. And that would take us to right almost where we are today, about 203, 204, something like that. And so now what I believe is that's going to be easy to achieve. And then what you're going to see is you're going to hit some resistance around the 20 period moving average here at 205 and change. And this is going to move a little bit as time goes on. So it's right now 205.19. That'll change by pennies every day. And then do I think you can challenge the highs? I think we could challenge the highs, but I don't think we get through the highs before the end of the year. I would find that very strange if we did. So we're going to call it, 206 to 207 is probably the top end here, but that's a little ways off. You're going to have, you may even have a little bit of a give back tomorrow with a big up day like this. Don't be surprised if you give back something. People will get bearish again. Don't get bearish. Just expect the markets to float up into the end of the year, but they're not going to be up every day. That's just the way it works. You know that from listening to me for a while. Now I want to talk about something interesting because we're going to talk about energy right now, and I'm going to go over to the XLE, and I want to show you, this is a basket of energy stocks, right? You have Exxon, Conoco, Occidental Petroleum, Chevron, all that stuff, if the chart could ever come up here. Okay, so here's the chart. And what I want to show you is something interesting. You had a nice big up day in the XLE. All the energy stocks, they were way overcooked on the downside. And that's what I've been telling you. I've been saying oil is way overcooked on the downside. Of course, it could go lower, but there comes a time when it's just everybody is so bearish. If you asked 100 people, 101 say that oil couldn't go up anymore. So, that's when you know that you need to get on the other side of the boat. But here's what I want to show you. This is a trade alert that went out at about 7:15 in the morning on yesterday, Tuesday. And what this is basically saying is oil is down again today and the XLE is in our buy zone at 72. Okay? Buy the XLE on a break of $72 a share. May trade lower depending on market conditions, but 72 should be good monthly and weekly support. Okay? And so what happened was early in the morning before the market opened, the XLE hit 72. And then as a low yesterday, it was 72.51. Never hit our buy price during market hours. So here's what happened. I know some people got upset about it. Some people got in the trade early in the morning figuring, 50 cents, no big deal. I'll just buy it. And that's fine. And they said, they sent me an email saying, did I do wrong? All this stuff. I said, no, just hold it. You'll be fine. And it just didn't hit my target during market hours, but it hit it during pre-market. That happens sometimes, and that could be a good low. It's just I like to see it during market hours when the real volume is in the market. But, that happens sometimes, and I apologize for that. For those that missed the trade, it stinks, and I get it. And believe it or not, I did not buy it down at during market hours. I was waiting for 72. So I did not get it, and I was waiting for my number. I had an order in, and it just didn't get filled, and then it took off without me. And that happens sometimes, and don't worry, there's another trade around the corner. Those of you that got it, good job. Just ride it out. Put a stop in the money at this point and just ride it up, because I think you can at least get to $80 a share, this 20-period moving average. And that's a huge trade from 72 on an ETF that's a basket of energy stocks. And you probably even go higher. You might even get to this gap window here at 82 and change, almost 83. So just want to show you that, I know what I'm doing over here, and I'm not always right. Do get stopped out of trades, but when everybody is so bearish, I know that's the time to go the other way and get on the other side of the boat. Don't listen to the talking heads on CNBC and all that nonsense and the Fed parsing words. It's all bunk. Don't just read the charts. That's all I'm doing. I'm just telling you what the charts are telling us to do. How many times have you heard me say, let the charts tell us what to do. Don't impose your will on the market. It's that simple. Don't get bearish when everybody's bearish. Don't get bullish when everybody's bullish. That's usually a time to go the other way. All right? So that's basically the story in oil. I just want to show you the VIX, because I've been talking about the VIX the last few days, and it's worth mentioning one more time because it kind of did what we said it was going to do. And the VIX just overshot a little bit my target, which was this gap window here at 23 and change. It overshot it a little bit, and then now look where you are. You're at 1944. The VIX is going to move down while the market moves up, and the VIX will probably move down into this area all the way down here. I'm going to look for this 20-period moving average to be a stopping point for the VIX. Right now it's about 1534. That'll change day by day, but 1550 is a good target for the VIX, and then we'll assess from there and see what happens. But as the market grinds higher, the VIX will grind lower, and that's just the way it works. Let's take a look at gold, and then we'll give it a wrap for tonight. I told you that today was a turn day for gold. I had a daily cycle bottom for gold. Okay, and that doesn't mean the market it has to be up today. That just means it's a daily cycle bottom, and I said it's plus or minus a day, so it could be Tuesday, Wednesday, or Thursday of this week was a cycle bottom low. So I'm looking for, if this bottom plays out, I'm actually looking for gold to trade up to in the 1235 to 1250 area on the price of gold futures. I'm looking at the February contract right now. It's 1194. Okay, that's a huge move, and we know that could happen. We've seen it happen here. It happened here. So it's not out of the ordinary for gold to put in these big swings up or down. Gold is volatile. I keep telling you that. But what does that translate to in the price of GLD? Well, that could be up to this area here at about 118.5, maybe even 119. We'll see what happens, and that would be a nice trade. If you're already in gold, you can buy on weakness, because I do think the low is in for gold. If I'm wrong, our stop out is below this low. But if I'm right, then we can still chop around. But into next year, I look for much higher prices in gold. So I even look for higher prices into next week in gold based on today's bottom. And we'll see what happens. We'll see if today or tomorrow puts in the bottom that I'm expecting on a daily basis. And then I'm looking for about 3 to 5, 6, 7 days of upside momentum, unless it all happens in one day, which it can, and it does from time to time. Look, happen here, happen here, happen here. So, these were, $30, $40 up days in gold. It can certainly happen again. Don't rule that out by any means. It happens all the time. It happens upside and downside. Okay, folks, I think that's it. I hope this is helpful. I hope I'm keeping you on the right side of the market, because it's very important to not pay attention to the media, not pay attention to the headlines and the blogs and and all the websites out there that were so bearish over the last few days. It's just nonsense. The only thing they do is they take a look at the direction of the market and they pen an article based on what's happening that day, and they extrapolate it assuming that that's going to continue. Well, it's not. And that's just the way the markets work. The markets are designed to fool the average investor. That's just the way it is. And once you learn how to read the charts and you let the charts tell you what to do and you don't impose your will on the market, it doesn't matter what you think. It matters what the charts are telling you what to do. And that's what I try and do for you. I try and keep you on the right side of the market, and hopefully it's helpful to you. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.